Hey guys, we're so sorry because of some technical issue. We were having some issues. We'll continue with the fundamental analysis with some stocks. Yeah, guys. We'll if you have any favorite stock, we'll analyze that also. So yeah, just put all the your favorite stock in the comment section so that we'll get to know what and all stocks we should do in fundamental analysis. And yeah, we'll continue with that.
So now guys, we'll be continuing with the fundamentals of one more stock that is from the defense sectors, which is Bharat Electronic Limited. So, Bharat Electronic Limited, so it was established in 1954 and primarily manufactures advanced electronic systems from the Indian Army, Navy, Air Force and other defense agencies. So the key business segment is like so it has defense and defense electronics and non-defense segments. So from defense segments, so most of its revenue comes from defense segment, almost around 90%. So which includes radar system, missile electronics, electronic warfare system, communication system, naval system, fire control system, C41 system. Non-defense segment includes homeland securities, railway electronics, aerospace electronics, medical electronics, smart city project. So business model. So Bharat Electronic Limited follows a project-based business model. So revenue is generated through defense orders, manufacturing and supplying products, installation and maintenance service, upgrades, life support. So you can see that the Bharat Electronic Limited market capital is around 3 lakh 11,616, which is the highest market capital around the defense sectors. So it is on the top one. And the current market price of this Bharat Electronic Limited is around 426. So which had a 22 high on 473 and 22 low on 361. So the stock price is around 51.4, which is below the median of industry, that is 62.92. And the stock has given it 36.5% return on capital employed, and return on equity is around 27.6%, and the promoters holding is around 51.1%, and there is no pledging percentage of promoters. So So you can see that from the past 2 years, the company stock has given a 52% year-on-year growth. So it was almost around on 30th June, it was almost around 125 rupees. Now it's currently trading at 426. So when this company is almost a debt-free company, so company has delivered a good profit growth of 23.6% CAGR over the last 5 years. So when you come to see the sales CAGR, so for 10 years it was almost around 14%, and 5 years it was almost around 14%, and 3 years 16%. And compounded profit growth it was around for 10 years 16%, and for 5 years it was around 24%, and 3 years for 27%. So when you do the peer comparison, so Bharat Electronics has a PE ratio of 51.42%, which is below the median level of the industry. And and we also talked about the debt, which is almost a debt-free company. The company PEG ratio is around 1.92%, and gross profit margin is around 49.1%, and company operating profit margin is around 29%, which is around like median of industry is around 21%, which is quite above the median of industry. So you can see that the sales has been increased over a period of time from 6,479 crores to 10,224 crores, yeah, quarter on quarter. So So even you can see that at the quarter end of the quarter, the revenue has been more compared to the previous 3 quarters. This is mainly because that the revenue is recognized only when the delivery milestones are completed and accepted by the customers. So and like example, like a fighter aircraft may be under production for several quarters, but revenues will gets booked only when the aircraft is delivered or major milestone is achieved. Therefore, sales are get concentrated in quarter 4 in each of the year. When we come to expenses, so most of these expenses are mainly from the material cost, which involves to manufacture these products. When we look at the industry overview, Indian defense budget continues to increase every year. So mainly due to Atmanirbhar Bharat, so government aims to reduce defense imports and promotes indigenous manufacturing and defense modernization. So India is upgrading like the air defense system, naval system, communication networks, electronic welfare capabilities, and even rising geopolitical tensions. So and export opportunity, India is actively promoting defense export. So Bharat Electronic Limited is expanding into Southeast Asia, Middle East, and Africa. So when you look at the income statement analysis, so sales was around 7,093 in March 2015. It was increased to 27,610 in March 2026. Which had almost sales CAGR almost 14% in last 10 years, and it was mainly driven by higher order inflows. So Bharat Electronic Limited continuously receives large defense contract from Indian Army, Navy, Air Force. So this was the main reason the revenue shoot up from March 15 to March 2026. So the second drive was about faster execution. So improved project execution has accelerated revenue recognition and defense spending. Government defense expenditure continues to increase. And when you look at the operating profit margin, it was around 17% in March 2015, and it was increased from 17 to 29 in March 2026. It was quite good. And interest was is around 7 crores, which is maintained over a period of 10 to 7. This is mainly due to that the company use a conservative capital structure, which is less debt in the company or reduction in the debt. And net profit, so net profit in the financial year 2015 it was around 1,197 crores, and it was increased to 6,062 crores over a period of time. Uh, which had a CAGR of almost 16% in the last 10 years. So this was mainly due to operating leverage. Fixed costs are spread over high revenues. So when you look at the expenses, it was mainly most of the expenses was the material cost and manufacturing cost. and employee cost is around 18% to 11%. So as fixed costs remain constant, so the profit has growth higher, benefiting from the operating leverage and better product mix. So even Bharat Electronics Limited is increasing supply like high-tech radars, missile electronics, advanced communication system. This carries high margins. So when you look at the operating margins, which we already discussed, operating margin improved from 17% to 29%. So this was mainly due to scale benefits, indigenous manufacturing, better product mix, and cost optimization. So BEL is not only growing but becoming more profitable over time. So next, when we look at the balance sheet, so the equity capital is it's 18 March 2015 and increased over a period of time from to 731 crores in March 2026. So company, when you look at the borrowings, so there is a no long-term borrowings in the company, and there is a short-term borrowings in first couple of periods, and most of its liabilities are from lease liabilities. So the company is maintaining a conservative capital structure. So it is becoming to a debt-free company or reduction in the debt. Uh, Next, this is important because there is no interest burden on the company, and no refinancing risk and financing flexibility. So most growth is funded to the internal accrual. So so when we look at the analysis of the company, so look at the return ratios of the company. So return on equity. So the company has given a return on equity of 27.6%. So which measures the shareholders return, and capital employed it is around 36.5%, which measures the efficiency of capital utilization. So how much the capital has been used by the company to generate the profit. So the return on capital employed is around 36.5% due to that the company, that is Bharat Electronics Limited, is an asset-light defense electronics, so which has a strong margins and no debt burden. So any company generating over more than 20% consistently is considered highly liquidity. So Bharat Electronics Limited is generating around 36.5%, is more than 20%. So it's considered highly quality. Next, when you look at the cash flow analysis, so historically, Bharat Electronics Limited generates healthy operating cash flows. So these are mainly due to advance payments from government contracts, strong profitability. So the main concerns from the cash flow margins were like higher receivables. Higher receivables, so where like we can see that debtors days increased from 145 days to 170 from March 2023 to 2026. So this was mainly due to the government payment cycle can be lengthy in the defense segment. So next was inventory build-up. So inventory days also increased from 230 days to 265 days. So because Bharat Electronics Limited is stocking inventory for future order execution. Uh, when we look at the cash conversion cycle, so even it has been increased from 237 crores to 342. So this was mainly due to more complex projects, longer execution cycles, inventory accumulation, and delayed receivable collections. So when we look at the value analysis, so the company is currently trading at 51.6 PE ratio, which is below the median of industry, which is 62.92. So why the market pays the premium is because of strong earnings growth, continued defense spending, and large future order inflows. So the current valuation, future growth expectation are already high. So when you look at the shareholding pattern of the company, you can see that the promoters are 51.14%, which has been maintained constantly over a period of time, that is in quarter and quarter. When checked about the yearly, has been maintained from 68.1% to it has been slightly reduced to 51.4%. The promoters of this company is mainly the President of India, and even when you look at the FIS has been increased from 6.65% to 19.51%. It's quite good. And when you look at DIS, it has been also increased from 17% to 20%. So the main key drivers for the company is like massive order book. So it was almost around 70 crores, and defense indigenous. So government defense for domestic defense manufacturing directly benefits BL. Rising defense budgets. So India's defense expenditure continues to grow, and export expansion. So BL is targeting internationally defense market. So even it has also advanced technological application. So AI enabled defense system, electronic welfare, advanced radar technology. So even the when you talk about the key risk of the companies, you can say that the dependence on the government orders and the project execution delays and working capital problem and premium valuation leaves immediate room. So when you come to the conclusion, so Bharat Electronic is one of the India's highest quality defense company. So dominant positions, strong order booking, debt-free balance sheet, and industry-leading ROA and ROC. So revenue and profits are compounded steadily over a last decade, supported by rising defense spending and government-led indigenous initiatives. While increasing working capital requirements and premium valuation remain concerned, BL is a well positioned to benefit from India's long-term defense modernization story. Therefore, Bharat Electronic Limited remains a fundamental strong long-term compounder with robust growth visibility. So this is the fundamental analysis of the Bharat Electronic Limited.